Hey guys, so today we're going over Hacken Token. Hacken Token is a pretty great project, cybersecurity based. They do a lot of audits. They do a lot of penetration tests, meaning they want to go in and exploit vulnerabilities in networks. They do wallets. They go over audits of your wallets, audits of centralized exchanges, decentralized exchanges, tokens, um, projects that are being launched. They do all this stuff, and they have a huge utility use case with their particular project. But let's go and look at the 2024 report that they just launched. All right. So it talks about some of the web security highlights. All right. Look at so here's some of the top six. Access control exploits caused nearly 1.7 billion in losses, accounting for 78% of all crypto hacks, a sharp rise from 50% in 2023. DeFi losses dropped by 40% compared to 2023, while CeFi losses more than doubled. DeFi is decentralized finance. CeFi is centralized finance. Phishing schemes led to an estimated 600 million losses, with a notable surge in pre-sale scams and celebrity endorsed rug pulls. Also, with these celebrity endorsed rug pulls, be careful of deep fake technology. A lot of times, it's not even a real celebrity. All right, gaming and metaverse platforms represented 18% of Web3 hack related losses. Bridge hacks declined for the second consecutive year, showing a 94% drop from 2022 and a 70% drop for 2023. Now, look at this. Solana has emerged as a hub for rug pulls, primarily driven by meme coins. All right, you got to be careful with the meme coins. You need to have a plan. You need to understand how to implement that plan, or you could get caught on the other end of the spectrum. Smart contract exploits, we got 308 million rug pulls, 192 million phishing, 607. All right, other 82, and then you got this access control of 1.72 billion, which is a lot, right? Access control in cybersecurity is a mechanism that determines who is allowed access to specific digital resources like data, applications, or systems by verifying their identity and granting access based on predefined rules, effectively preventing unauthorized users from accessing sensitive information. You gotta ask yourself, wow, that is being hacked? That's pretty deep, right? All right. Now, hacker community consists of over 100,000 people. So it's a big, huge network. That's where the decentralization comes. So it is a decentralized autonomous organization. All right. That's a lot of people working in to make sure the protocol is done. Okay. Now, they call themselves the Trust Army, allows everyone to gain access, a profession, and a stable income by researching blockchain data and contributing to building a transparent Web3. All right. So another essential high, that's what you call it, that's how you say it, high, is utility is ETB. Okay. So let's look up and see what the ETB is. All right. So ETB stands for Enterprise Tariff Discounts, which refers to a utility where users can purchase access to hacking smart contract audit team services by buying ETD, essentially linking the success of the Hackens business with the token economy and boosting its liquidity by activating a deflationary mechanism within the high ecosystem. Now, I want you guys to focus on the word ecosystem. If you think about cryptocurrencies or you think about fiat, most people will say, what is the reasoning of creating cryptocurrencies when we already have currencies in the world that functions like they should, which is to buy goods and services. So why do we need any new ones? Technically, we don't need any new ones, but here's the genius move. Think of Chuck E. Cheese. Chuck E. Cheese has a model where you have your fiat, you convert it over into their tokens, and you participate inside of Chuck E. Cheese's and playing their games and buying, the prizes, right? Well, crypto is similar. The goal is to create ecosystems, and inside the ecosystem, you have people who do what? They convert their fiat into the native currency within the ecosystem. The more you can build an ecosystem of supply and demand, you create a new mechanism of value. That is the whole purpose of all this, to create a new mechanism of value. Well, in order to do that, one of the biggest things is, how do you create a true supply and demand of services that are basically based off the world that you have created. And that's why a lot of you forgotten about the metaverse, which is still being built and will be the future. Okay. All of these things matter. So when you look at gaming and you get in and you got these Roblox, whatever you call it, Robux, Fortnite got all these different things you can buy inside the ecosystem. It keeps you in, and it builds their network, and the network value increases. Now you may say, well, you could just do that with fiat. Yeah, you possibly could, but here's the thing: when you create value that much, all right, the ecosystem now, what it does is it shares and distributes the value back into those who build the ecosystem and who sustains it. That's where your staking comes in at. That's where your token value increases, and you can what, trade out of it. You can, and the next person can come in and buy it. So it has elements of like a stock, a share, but it's not a stock. It's not a share. And if you really want to look at it, if it was a share, what do you own it? You own a piece of the network. You own a piece of the ecosystem, not a company. That is the differentiation of what crypto, guys. All right. So you get that, right? Now, the said high security is a multifaceted, incorporating both technical measures and community engagement strategies to ensure integrity and value. At its core, the security approach are staking mechanisms, right, through the membership program. It incentivizes holders to engage with and contribute to the ecosystem. Man, we just talked about that. All right, so the members can gain access to benefits and privileges, which not only enhance the token's utility, but also security by reducing circulating supply and encouraging long-term holding. All right, so if you reduce that supply, that's also the mechanism to make sure that what, in the long run, the token value can increase, because you're taking and you're staking the rest to make sure that the network is strong. It's pretty good. All right. They also have another layer of security comes from strategic decision making regarding the platforms chosen for staking. All right, so they prioritize security in these choices. So it's pretty good. Uh, so it serves as a multi-purpose within the ecosystem. All right. They got versatility, integration in various aspects of cybersecurity and blockchain. Now, let's look at some of the talks about when it has the penetration tests. Let's see right here. All right, so the security of Hacken Token regular security assessments and penetration testing. All right, so those are really really good in exploiting those vulnerabilities. So because if the ecosystem is going to remain strong, they have to be able to do that. Now, they also provide this service for other people as well. Okay. Um, they got use cases. So with some of the use cases that's going on, but let's look at some of the services. They got dual defense, smart contract audit, blockchain protocol audit, penetration testing, cloud penetration testing, crypto wallet audit. So these are services they provide for other people within the network as well. These are some of the ecosystems that Hacking has participated in. Got Polkadot, Solana, Ethereum, EVM, all right, SU, MetaMask, etc. So these are some pretty good ones. Also, I will make sure I add in this PDF in the description box so you guys can check out what has happened by quarter of last year. All right, and it goes in depth about the access control, exploits, dominant threat, access breach. All right, so private key theft remains the most significant security threat year after year in 2024. All right, access control exploits closely tied to private key compromises accounted for nearly 75% of the total crypto hack losses up 50% in 2023. All right, look at that, 1.7 billion. We already talked about, so that's a sharp increase. All right, so they said it consistently ranked as dominant threat across every category. All right, so CFI, the largest hack of the year, was CFI caused by access control vulnerabilities. Most damages from access controls occur in centralized exchanges, with DMM Exchange and Warex X being the most significant incidents, resulting in combined losses over 500 million. Well, they said, not your keys, not your crypto. So anytime you store your crypto on a centralized exchange, they have access to that. So you either get a cold storage or a digital wallet. All right. The only reason why you need to have it on exchange if you're on ramping or off ramping, and then once you're done with it, keep it moving. All right. Uh, Now, why does it keep happening? Private key compromises. All right. So, insecure private key management platform. Victims also often rely on third-party private key management services that lack robust security practices. Some platforms store keys in centralized systems without proper encryption or distributed storage, creating a single high-value target for attackers. All right, you got social engineering attacks. Attackers frequently impersonate wallet providers or support teams. So that's where your phishing comes in at, tricking users into revealing their private keys or seed phrases. The success of these scams often came down to inadequate user education and the absence of clear verification methods to authenticate legitimate communication channels. Now, you also, if you download Hacking's uh, what you call it, their app. Inside their app, they actually have education and they test you. Right. So it's pretty good. All right. They basically want to educate you on cybersecurity. All right. Many wallets and platforms use simple single signature schemes, turning them into a single point of failure. In one notable DeFi case, a compromised private key allowed an attacker to drain millions in assets without requiring any additional approvals. All right, so insecure backups. Private key backups were often stored in an unsecured environment, such as unencrypted cloud drives or poorly protected physical locations. Attackers who gained access to these backups were able to swiftly compromise associated wallets. And then it goes in, how can businesses protect their keys? So it gives all this, right? And I think this is a real good breakdown. Cybersecurity is going to be here forever as long as we got computers in some form of a network. All right, I like what hacking is doing. All right, these are the markets that they're available in. Now, I was able to secure a lot of hacking when they were under QCoin. When we eventually had access, but of course Americans no longer have it. So of course you probably have to go through a swap, and there are other plenty of swaps. Now Whitebit just listed them, or Whitebit is one of their new ones. Let's see what they're talking about. So this is Whitebit over here. It's a European base, so I don't even know. You probably don't have access as well. So I looked at the liquidity based off of Whitebit. They do about 3 billion of spot trading. Um, daily. So that's pretty good. But I would like to see Hacking get on Binance and eventually Coinbase. That would be really, really good if they can get on those two. That would bring in some liquidity. Let's look at a little bit of market analysis as far as, technical analysis based off the price point. So right now it's at 6 cents. And once you look at, let's go back to all, and let's look at market cap. So right here in November the 9th of 2021, the market cap is at 141 million. Right now, the market cap is at 53.2 million. So let's go back and look at price, but let's go back to November 9th. All right, it was at 31 cents. All right. Now, so I want you to remember that what was the market cap again? So 141 million market cap. Price was at 31 cents. Imagine if this could get to a billion. You see where the math going now? Now let's look at this over here. In March, it was at 107 million market cap. Let's go back and look at price. So I forgot what March. Hold on, let's see what March we were at though. All right, it's March 2nd. So March 2nd. So it's around 10 cent. Okay. So like I said, imagine if it get to a billion, guys. That it's a possibility, right? I believe once we get in more markets, it can be because this is a what we call a true use case. If you're researching crypto and you tell your friend, "Oh yeah, I got Dogecoin." Okay, what does that do? And you don't know, that's the problem. You need to know. Somebody said, "What is hacking?" Oh, it's a cybersecurity protocol. They they provide an array of services to make sure that crypto projects are legit, wallet services are legit. They look for vulnerabilities to exploit. They got a team of cybersecurity experts that go in and they partner with organizations and they go in and they do penetration tests. They test out their systems. They send out like watch this guys. Like I don't know, but and if you in cybersecurity, you already know this, and you're way more advanced than I am. But on the flip side, I know just a little bit that when these organizations are being tested, their employees don't know. There are many phishing emails that are sent out, all right, that can show that, listen, man, we sent out phishing emails to 100 of your employees. Out of the 100, 10 of them actually opened up, gave up privileged information that should have been private. If this would have been a real threat, your organization would have went under. We could have exploited you. We could have did this and that. So that's why a lot of organizations now have cybersecurity training. I know in the educational system, we have cybersecurity training uh, because we work with vital data, all right, privacy, all that stuff. So of course we would be targeted. So you got to be careful, right? Let's look at hacking and its price point. Right. So we see that at one point we were up here, and that was November of 2021. We was up here around 80 something cent. Now, mostly when you see something like this drop off, typically it's looking like penny stockish type thing. But here's what I want you to understand: this is that there's something that came into the market in this area right here, all right, and this demand it really skyrocketed out of. Okay. This gives me hope. Okay. This was enough demand to take this thing 11x, one over 1,107% gain. Okay. Now that's that's a good sign that there's something that can, when it wants to, that can push this thing out. Now, here's what I want you guys to understand is that these types of plays, they're given a lot if you pay attention. So this and it's a loading zone. You look, price gets to this. This is a 375% gain. Right? From down in here to up here, this was a 665% gain. But even if we took it from these lows, right, we're down here This was a 1,140% gain. So some of you probably don't remember, but I did a video a long time ago, probably for the private group. But we talked about how you need to look at penny stocks to study penny stocks behavior to understand certain crypto. Why? Because crypto has a liquidity issue. A lot of people don't want to talk about that. Bitcoin's massive growth in its early years is because of the imbalances of supply and demand was so large. It's almost like, think of the spread, but the spread is basically incorporated, deeply embedded into the price, to where, you know, if it's thinly traded, all right, somebody could come in and drop $3,000 on Bitcoin in the earlier days, where if there wasn't a lot of trading going on, $3,000 could have made the Bitcoin jump. I don't know, 300% just off of that. Now, I'm just using those small numbers so you can get it. What I'm saying, it could have been 300,000. Who knows? But in the penny stock world, we do know that the volume may not be there, but then all of a sudden it's a big spike. But where is the volume? The volume lets you know how many participants are really truly at that price level. And if it's not a lot, you know there's manipulation. That means there's a whale. That means that somebody there got a big supply. Now, guess what? That could be here on the chart. It could be a whale caused this. All right. And typically, when a whale caused this and it spikes up, the whale doesn't make a lot of money on a spike up like this. Why? Because there's too much of an imbalance. Look at this. Look at this wick come back down. This is a improper amount. All right. Now watch this. If it holds true, all right, that means that when the market maker, the whoever was controlled, when they tried to sell, they couldn't sell off enough. There was not enough buyers to come in the market to sustain this. So guess what? You have a lot of unfilled orders sitting here. So what do you think is going to try to happen again? They're going to try to get price to come back and see if they can get people to bite and absorb these unfilled sale orders, right? It means there's too many sale orders here and not enough buyers coming to market. So when the market get to run it again, what they want to do is they want to keep price in this area as long as possible. They want it to move sideways so they can start unpacking. But you clearly see over here, right? And I don't know what platform it launched on before it got the Q coin, but in its inception, it, within a day, look what it came up to 60 cent, and then it come crashing back down. But remember, this was what all there's a lot of unfilled what sell orders. What happened? Price came up and covered this. Now they may have gotten some. All right, they may have bought some that was remaining in here. All right, and then they get back down, and then we spike up a little bit more to get some more in here. But other than that, there's a lot left. So price potentially could be trying to get up there. Now it looked like we got a huge cup and handle formation, which is bullish. All right, we take here, we go down here, all right, and then we got this going on as a handle. All right, so this could be what we're dealing with. Okay, and we do know that for the most part, based off this impulse, this is these are the targets that we're looking to get to. So based off this impulse, 16 cents next, 20 cent, then 31 cent, then 43 cent, then 50 cent. All right, and that will conclude that. Okay. All right, so let's get back over here. Let's finish up with this. All right, so audits with the portfolio insights. All right, so they have done 1,406 audits. All right, so total audit companies, they did 921 companies. Okay, Secured market cap 149 billion of, I guess it's all the companies. Found vulnerabilities 8,044. And then findings of severity, they got critical, they got 207, high to 723, medium 1,227. So here we go. Audits by platform. So we got Ethereum. So they're leading the way with Ethereum at 42%. Um, so it tells you what platform. So they did Binance, all right, and it'll tell you the date that it was last completed. So this was February 13th, 2023. Crypto.com uh, did an audit, all right, and I believe we can go look at the audit. Okay, so here's the history. What is the Crypto.com? It gives the little breakdown, all right, and let's see. So the audit type was proof of reserves. So they did that January 1st. Okay. Sorry about that. It's crazy. My dog fell off the couch. That was sleep. And I'm not editing this video, so welcome to the real world. All right. So they did block. Let me see. Trying to see if you can actually look at it. Is there anything we can click on? Let's see. I don't see anything right now, but sometimes you can actually go in and look at the volume. I mean, the audit. All right. So, yeah, let me see audit reports. Let's see. Oh, same thing. Let's see if we click on audits. I don't know which if we able to get any more information because a lot of times they can break down exactly what was audited. There it is. All right, here we go. Yeah. So we'll just go back. If you go on the site, there's a little arrow here. Click and it gives you an audit summary, total findings, what's going on, potential risk, definitions, appendix, all that stuff. Yeah, and then you, of course, you can view the report right down here. Um, you can view the report in PDF format, and here you go. Got 18-page security analysis for Nurashi. All right, whatever platform that is. So, guys, this is doing the work. You see it. This is utility. This is hacking. Like I said, oh, and if, of course, you got the markets. You can go on. You can go to any swap, any digital wallet that has swaps. You probably can use it uh, to get it. So yeah, check it out. Um, get more involved. Of course, you can check out the white paper. You can go on Twitter. Make sure you're following them. Make sure I'm adding them on my list, on my crypto list. Boom, save, bam, and then every time they post on Twitter, I'll be able to get it. But I like hacking and what they're doing. Solid project. And like I said, if you got a wallet like Trust Wallet, see if you can swap. Safe Power Wallet, see if you can swap. And of course, see if you can do it through Coinbase Wallet. See if they got swap features. But you just have to check it out and see. All right. Um, other than that, that's it. Hit the like button, subscribe. This is your boy E White. Have a safe and happy new year.